You already know Warren Buffett owns a huge chunk of Apple and famously swigs cherry Coke. Berkshire Hathaway has a massive position in Bank of America. But what most people miss is that those famous stock picks aren't the real engine. They're the hood ornament. The true horsepower driving Berkshire Hathaway is a quiet collection of companies that Buffett's firm bought entirely. We're talking about businesses so large that if you glued them together, they'd form an economy the size of a country like Sweden. Today, we're sprinting through that hidden empire. We're pulling back the curtain on the wholly owned subsidiaries that form the foundation of Buffett's legacy. From the massive insurance operations that bankroll everything to the colossal railroad that drags America's freight across the continent. This is the real story of how Berkshire Hathaway works. Ready? The clock starts now. The two halves of Berkshire. To understand Berkshire, you need to perform a quick mental split. Picture two separate buckets. In one bucket, you have the famous public stock portfolio. These are the companies you see on Berkshire's 13F filing: Apple, Chevron, American Express. These are minority stakes. Berkshire owns a piece, but it doesn't run the day-to-day operations. In the other, more important bucket are the operating subsidiaries. These are the businesses Berkshire owns 100%. It sets the strategy, appoints the CEOs, and harvests the cash. These subsidiaries are powerful cash-generating machines that send their profits straight to Omaha. This cash flow is supercharged by the insurance businesses. Insurance premiums are collected today, but claims might not be paid for years. That mountain of cash held in the meantime is what Buffett lovingly calls float. It's like having an interest-free loan with no due date. And the operating subsidiaries, from candy makers to jet engine part manufacturers, keep that float machine humming. Insurance, the heart of the empire. The insurance group is the financial core that provides the capital for everything else. GEICO, the gecko from the commercials. GEICO is one of the largest auto insurers in the entire United States. Buffett's history with GEICO is a long one. He first bought GEICO stock way back in 1951, sold it for a quick profit, and then spent the next 40 years kicking himself for selling too soon. When he finally got the chance to buy the whole company in 1996, he didn't hesitate. Since then, GEICO's market share has surged. The brand is so powerful, people dress up as the gecko for Halloween. Berkshire Hathaway Primary Group. Think of this as GEICO's quieter, more specialized cousin. This group doesn't insure your car, it insures complex risks. The Medical Protective Company, for example, covers doctors against malpractice suits. National Indemnity insures everything from rodeo bulls to multi-million-dollar satellite launches. U.S. Liability focuses on small businesses. They aren't flashy, but they are incredibly profitable, often paying out less in claims than they collect. That's pure underwriting profit. An investor's dream. Berkshire Hathaway Reinsurance Group. If the primary group is retail insurance, reinsurance is the wholesale operation. These companies, like General Ray, don't insure you or me. They insure other insurance companies. When a massive hurricane or earthquake hits, and smaller insurers face billions in claims, they turn to Berkshire. Catastrophe headlines love to focus on Berkshire's potential losses, but they rarely mention that after a disaster, premiums for this kind of protection jump, and Berkshire is one of the only players with a wallet thick enough to handle it. Regulated, capital-intensive giants. Next are the behemoths. These businesses require enormous capital and operate in highly regulated industries. That scares off most investors, but for Buffett, it's a recipe for a perfect long-term hold. BNSF Railway. BNSF is a continent-spanning rail network stretching from the ports of Los Angeles to the yards of Chicago. In 2010, Buffett bought the company for roughly $26 billion in cash and stock, calling it an all-in wager on the economic future of the United States. BNSF hauls the coal that powers our homes, the grain that becomes our bread, the chemicals and products we use daily, and even the Amazon box on your porch. The moat is staggering. No one is building a competing transcontinental railroad ever again. The cost and regulatory hurdles are just too high. Berkshire Hathaway Energy, another giant hiding in plain sight. After years of being a majority holder, Berkshire took full ownership of Berkshire Hathaway Energy, BHE, in 2024. BHE is a massive portfolio of energy assets, serving millions of customers and owning natural gas pipelines that move a significant portion of all gas consumed in America. Its beauty is predictability. Rates, and therefore returns, are locked in with regulators. The cash flows like clockwork, and Berkshire can use these stable assets as collateral to borrow money at incredibly low interest rates, providing even more capital for the next big deal. Manufacturing, service, and retail. This category is a diverse collection of businesses that have one thing in common. They are all durable leaders in their niche. Precision Cast Parts, PCC. If you've flown on a modern jet, you've entrusted your life to PCC's products. They make incredibly complex metal components for jet engines. In 2016, Buffett paid a staggering $37 billion for PCC, one of his biggest deals ever. Replacing a supplier like PCC is nearly impossible for companies like Boeing or GE, due to manufacturing tolerances and safety certifications that take decades to earn. It's the ultimate industrial moat, Lubrizol. This Ohio-based company makes specialty chemicals. It sounds boring, but its products are indispensable. Lubrizol creates the additives that keep engine oil slippery and the advanced polymers used in thousands of products we use every day. McLane Company. McLane is a logistics powerhouse. Every night, its fleet of trucks delivers chips, candy, and sodas to convenience stores, retailers, and restaurants nationwide. Buffett bought McLane from Walmart in 2003, and its revenue reached over $52 billion in 2023. Duracell. When Procter & Gamble wanted to exit the battery business, Buffett structured a brilliant deal. Instead of cash, he swapped P&G stock that Berkshire owned for the entire Duracell company in a tax-efficient masterpiece. Forest River. During the pandemic RV boom, Forest River couldn't build campers and motorhomes fast enough. Berkshire bought the company in 2005, and today it's the top RV maker in North America, dominating a market fueled by the desire for the open road. Other notables. The list goes on. Benjamin Moore Paint, Brooks Running Shoes, Flight Safety Pilot Training, and Fruit of the Loom Underwear. It gets even more diverse with companies like Business Wire, which distributes press releases, and Oriental Trading Company, which ships party supplies by the truckload. Each is a leader in its niche, requires minimal capital from Omaha, and faithfully sends its cash back home. We're just scratching the surface of Buffett's hidden empire. If you're enjoying this deep dive into how the world's greatest investor really makes his money, take a second to hit that subscribe button and ring the notification bell. We release videos like this every week, and you won't want to miss what's next. Financial services you didn't expect. Beyond insurance, Berkshire has other, more disguised financial companies. Clayton Homes. On the surface, Clayton Homes builds manufactured houses. But the hidden genius is the mortgage book. When you buy a Clayton home, Berkshire's financing arm often provides the mortgage. They'll collect payments for the next 20 or 30 years. It's a tiny, highly profitable bank disguised as a housing company. Berkshire Hathaway Automotive. This is a network of over 78 auto dealerships that generates over $8 billion in annual revenue. For decades, Buffett avoided the auto retail business, but then he realized a collection of well-run dealerships are basically ATMs on four wheels. By consolidating this fragmented market, Berkshire brought professional management and immense capital to the business. The glue. Why wholly owned is king. So why this obsession with owning companies outright? It comes down to a few core principles: control, cash, and quiet. Buffett controls the company's destiny, keeps all the cash, and gets to completely ignore the quarterly Wall Street circus. He can tell a CEO to double spending tomorrow on a great opportunity without worrying about a dip in quarterly earnings. No earnings calls, no activist investors, no drama. It's a framework built entirely for long-term thinking. The hidden network effect. From the outside, Berkshire looks like a random collection of assets. But inside, there's a hidden network. GEICO's premiums might fund a new BNSF locomotive. McLane's trucks might deliver supplies to Dairy Queen. Yes, Berkshire owns that too. This synergy isn't mandated from the top. It happens organically because Buffett hates idle cash. It looks like a random assortment, but it hums like a single efficient organism. The numbers that tie it together. Add up all these subsidiaries, and you have a corporate entity generating hundreds of billions in annual revenue. These businesses employ over 390,000 people. Yet, the corporate headquarters in Omaha that oversees this entire empire has only about 26 people. That is a level of leverage and decentralization that Silicon Valley can only dream of. What happens next? The question of succession has been answered. Greg Abel, Berkshire's vice chairman, is Buffett's designated heir and already runs most of the day-to-day decisions for the non-insurance businesses. The playbook is designed to stay exactly the same. Buy durable businesses with strong competitive advantages, let their managers run them, and keep the cash flowing to Omaha. The structure is so robust, the company can swallow even more massive acquisitions without adding a single new person at headquarters. So next time you hear someone on TV list Buffett's top stock picks, you'll know they're missing the real story. They're talking about the sideshow, not the main event. The real strength of Berkshire Hathaway is this sprawling empire of wholly owned companies that never trades on the stock market. That is the empire that mints the cash, that buys the stocks, and that cements the Oracle of Omaha's legacy as the greatest capital allocator of all time. Drop your favorite wholly owned Berkshire company in the comments below, and I'll catch you in the next one.